In today's short video, we're gonna have a quick overview through the 7 key practices for beginner day trading. What is going on, guys? This is Barro, aka Investmentor. So before everything, please don't forget to smash the like and subscribe button down below with any of your thoughts and comments. We will always donate to the charity recommended by you based on the number of likes, subscribe, and the amount of comments. So you can be simply doing good to the society and community by following us on YouTube or some of the educational courses. So let's have a quick check through the 7 key practices. First is to find out a trend and market structure. Second is to identify the value zone or value area. Third is about how to choose a stock to buy. Fourth is about managing your position size for asset allocation and risk management. Fifth is about the trading setup for better entry and exit point. Sixth is about the benchmark of the decisive price. 7 is about the mentality issue, about the discipline issue. So let's start from the first one. The first is to find out the trend and market structure. We have to understand that in the long run, the US stock market has been trending up, and it has been trending up for decades. We can look at the S&P 500 index, Dow Jones Industrial Average Index, Nasdaq Index. But it's not the same. It's not exactly the same for every single stocks though. So we also have to pay attention to the midterm trend and short-term trend. It can be like a month, it can be a quarter, it can be a year, 3 years, 5 years. Or sometimes depends on your trading strategies. We also look into trends in hours or just trend in few days. It really depends on your trading strategy and the products you trade, the single stocks you trade, the nature and the feature and the characteristic of the products you trade. Second is to find out a value zone or value area. This helps us to tell what's a good time to buy and what's a good time to sell. And also we can visualize some supports and resistance levels. And also we can use some moving averages or trend lines to better identify the good point of entry or exit. Let's have an example with Tesla stock price chart. So we can see that in the long run, Tesla is obviously in upward trending, but it really depends on the period and the time we're going to trade. Let's take the recent price chart of Tesla as an example. If we identify the value zone with a period like this, we can use some of the drawing tool to draw some like trend lines to visualize some of the resistance and support levels. And also we can use like moving average. I'm using moving average here for like 5-day, 20-day, and 50-day, but you can always customize for your own. Third is about how to choose a stock to buy. In stock market, there are thousands of stocks to choose. There's just like too many to research in every segment, in every market, and there are also some of the other derivatives to choose. So you can always be wondering, oh, how am I gonna choose? Like what kind of stock I'm gonna buy? So to this point, always remember that we usually choose the stock with the biggest change of price, and in the terms defined by you. It depends on if you want to look at the stock price change in past 1 month, in past quarter, in past half a year, or past 1 year, or even longer. It really depends on your strategy. But we always remember that the strong stocks tend to outperform the market in both the short run and the long run. So for day trading, we always choose the stock with the biggest price change or higher volatility. So we have the chance to take profit. That also come up with a bigger risk to lose money. Fourth is about to manage the position size. This helps us for better risk management and asset allocation. For a lot of beginner day traders, sometimes we just want to buy any stock at any price at any time randomly by our intuition. But this really makes us to blow up the account sooner or later. So we have to do the position management. Usually, we choose at least 10 to 20 stocks to focus, or even more, depends on your time and the research you do. And With our total capital, we allocate no more than 10% for each single stock. It can be just 1%, 2%, but it's better not to be more than 10%. Even hedge fund manager with high risk tendency don't bet on any single stock very heavily. So if we're going to buy in 3 or 5 stocks, we can allocate the same amount of value to the 3 stocks. If we're going to spend $300,000 to buy 3 stocks, we can spend $100,000 for each stock. So the number of shares for each stock we buy are not going to be the same. And fifth is about a trading setup for entry and exit point. We have to do trading setup for entry and exit point before every trade, before every day trading, and 100% follow through the plan. We have to define a stop loss point and price taking point before we place an order, and then 100% follow through it. It's very risky to place an order first and then trade by your instinction. That's just another way to blow up your account sooner or later. And then we can always use the trend, the market structure, and the value area, value zone, the support, resistance level, moving average, trend line to help us to define the entry and exit point, the profit taking and the stop loss point. After the trading setup, we don't change our mind easily after that, unless there is a breaking news or events happen during the trading hours. And 6 is to use closing price or last price to be the standard of decisive pricing. Closing price and last price are always better than intraday moving average price to make decision for your trading. Because during the trading hours, the price movement can always go up and down through the support and resistance level you set beforehand. So we always wait until the closing price or the last price, no matter for 1 day, 1 hour, or minute trading. And 7, the last but not the least, which is the most important somehow, is about discipline for greed and fear. It's about your mentality strength. And then we have to 100% follow through the original plan all the time, no second guess, no play by ear, no hesitate, and no tango. As just mentioned, we always do trading setup before every trade, before every day trading, and 100% follow through it. And then we never come into a mindset like,
oh, I'm making a lot of money today. I'm making a lot of money recently. I'm just a genius. I will keep winning money this way.
And never go into another trap like,
oh, I have lost a lot. Oh my God, what am I gonna do? Am I gonna die? Can I win it back or something?
Don't think in that way. You have to control yourself and discipline not to be into that kind of mentality. Good mentality is the hardest part to practice in order to manage greed and then fear and beat the market and become profitable. But that's really important, so we have to remind ourselves and practice that day after day for every trade. Okay, so that's about the 7 point. It's very simple and easy, but really important to review and keep that in mind. So let's have a recap here. The first is to find out the trend and market structure, and the second is to find out the value zone or value area. And the third is how to choose a stock to buy and focus. And the fourth is to manage your position size for better asset allocation and risk management. And the fifth is about the trading setup beforehand for your entry and exit point before every trade. And the sixth is we always use closing price or last price to decide our strategy. And the seventh, the last but not the least, we have to always discipline ourselves for greed and fear and have a strong mentality strength to beat the market. Okay, so hope this is helpful for your trading and good luck for your green every day. And let's check out more until next time. See you.